All right, today we're diving into one crypto investor's playbook for 2025. The whole strategy is built around a single, pretty bold claim about the opportunity he says is staring us right in the face. Let's break it down.
So the guy whose strategy we're exploring, Craig Percoco, he's convinced we're at this pivotal moment. He's making a huge comparison here, saying that getting into crypto today is like having the chance to buy the S&P 500 right before it went on a 58x run. We're talking about a massive multi-generational wealth opportunity.
Okay, so that leads to the obvious question, right? If this thing is so huge, why won't everybody get rich? Why are most investors probably going to miss the boat? Well, according to him, it all comes down to a fundamental mistake, a misunderstanding of the market's bigger picture.
And that misunderstanding really starts with how we're all taught to look at the charts. To even see the opportunity, he says we first have to zoom out and totally change our perspective on all this data.
You know, it really is all about perspective. On the left, you've got the standard Bitcoin price chart. It's what you see on the news, and it looks absolutely terrifying, like a chaotic bubble waiting to pop. But if you take that exact same data and just switch it to a logarithmic scale, like on the right, the whole story changes. It smooths out all that crazy noise, and suddenly you see this surprisingly predictable long-term growth channel. It stops looking like a bubble and starts looking like, well, a normal growth curve.
So when you take that long view, a really clear pattern emerges. Bitcoin's price has pretty consistently moved between this green low band and a red high band. And in every single previous market cycle, the peak has pushed way up inside that red zone. But this time around, we've barely even touched it. That suggests this cycle could be far from over.
So what's actually powering these cycles? The argument here is that it's not the daily news headlines or social media hype. It's something much bigger called global liquidity. It's basically just the total amount of cash that central banks all over the world are pumping into the financial system. And when that liquidity is high, assets like crypto tend to do very, very well.
And this is where it gets really interesting, because right now there's this divergence that most people are completely missing. While the US is actually tightening its money supply, making money more scarce, the rest of the world is doing the exact opposite. Global liquidity is on the rise, and historically, that has been a super powerful setup for major market run-ups. It's like the global stage is being set for a really big move.
Okay, so if the big picture looks bullish, how do you actually position yourself for it? The strategy here is actually pretty simple. It's a practical two-bucket approach for your portfolio.
And the core philosophy behind this is, a bit of humility. It's admitting you can't perfectly time the market top or the market bottom. Nobody can. The real goal is just to position yourself correctly to ride the wave of the overall cycle, no matter what crazy stuff happens day to day.
And here's what that positioning actually looks like. It's a two-bucket system. 80% of your portfolio goes into a core bucket. That's your stable blue chip stuff. And then the other 20%, that gets funneled into a high-risk, high-reward casino portfolio. Let's break that down a bit. That big 80% core portfolio is your foundation. Think Bitcoin. It's for preserving your wealth and getting that steady, long-term growth. The 20% casino portfolio, on the other hand, is where you hunt for those life-changing 10x to 100x returns. You're making small bets on new, emerging projects, and you fully expect most of them to fail. But the one or two that hit big will more than pay for all the losers. The logic for the casino bucket is just pure portfolio math. Think about it. If you make, say, 10 small bets, and you're prepared for 7 of them to go to absolute zero, but the other 3 give you a 20x return, well, you've still massively multiplied your initial capital. It's all about surviving the losses to capture those absolutely huge wins. So, the big question is, where do you even find these potential 100x bets? Well, instead of chasing whatever's trending on social media, this strategy is all about following the quiet money. And right now, big institutions are quietly pouring billions into one very specific narrative. And that narrative is called real-world assets, or RWA for short. The whole idea is to take tangible, traditional things like a piece of real estate, a stock, a bond, and create a digital version of it on the blockchain. This can make everything way more efficient, and huge players like BlackRock are already making major moves in this space. And the scale of this opportunity is, well, it's just staggering. You've got firms like BlackRock and Citibank projecting that RWA is going to be a $30 trillion market by 2030. To put that in perspective, that is bigger than the entire GDP of the United States. If crypto can capture even a tiny fraction of that, the value created would be absolutely enormous.
So within this RWA narrative, there are a few specific projects he's watching. For instance, you've got Ondo, which is building some of the core infrastructure for these new assets. There's Mantra, which is focused specifically on tokenizing real estate. And then there's Subsquid, working on the super important data layer. These are exactly the kind of high potential, high risk bets that fit perfectly into that casino portfolio.
But here's the thing. None of these bets, not even the safest ones, matter without the single most important part of this whole strategy, and that is patience. It all comes down to playing the long game and just understanding the market's underlying rhythm. This strategy uses a simple model based on Bitcoin's 4-year halving cycles. And if you look back at history, the market peak usually arrives about 532 days after each halving. So, based on that pattern, this model projects the next major cycle peak to be somewhere around October of 2025. This gives you a really clear long-term timeline to help frame your decisions.
And this quote right here, it really just sums up the whole approach perfectly. Forget about the day-to-day drama, forget about frantic trading. Real wealth generation in this space, according to this source, comes from understanding these broad, predictable cycles and simply having the patience to hold your positions right through them.
So look, if we accept the premise that these market cycles are a recurring, somewhat predictable pattern, then really the only variable left in the equation is you. It all boils down to one final, simple question. How are you going to be positioned for what comes next?